This episode is presented by Vallurupalli.
Hi, everybody. This is David Barnes, CFO of Trimble, and you are listening to the CFO Thought Leader Podcast.
This is episode 896.
Revenue will come. It's just not there yet. Oftentimes, these value metrics are really important in product-led growth, go-to-market motions, where the product is given out and quickly adopted and then grows over time internally within a company. But a value metric unique to each business. So in the payment space, it could be number of payments being sent on a daily basis per customer. It could be number of active users with your product. It could be product usage metrics in general, and looking at which product usage metric has the highest correlation to net retention rate.
Hi, it's Jack. On today's show, we speak to Aneal Vallurupalli, CFO of Airbase. Back in 2010, in the wake of the economic downturn, when investment banks maintained a meager flow of new hires, Aneal Vallurupalli walked through the doors of Union Square Advisors of San Francisco, opening a career chapter for the young finance executive that Vallurupalli today compares to the residency period of a new physician. For Vallurupalli, investment banking was foundational to the career he would pursue in the coming years. Still, Airbase's CFO tells us that from his very early banking days on forward, he viewed investment banking as a place to learn, but not his ultimate career destination. You'll hear that story and much more on today's episode. We begin after this.
This episode is presented by Vallurupalli. That's the sound of not worrying about sales tax compliance. Because when you automate it with Vallurupalli, you don't have to worry about collecting sales tax or tracking who and what is tax exempt. With Vallurupalli, you don't even have to worry about new tax laws and regulations. Vallurupalli does it for you. If your business sells internationally, Vallurupalli has you covered with cross-border tax compliance solutions. And when it comes time to file tax returns, Vallurupalli automatically takes care of that too, giving you one less thing to worry about. Vallurupalli has managed billions of sales for small, mid-size, and enterprise businesses, and seamlessly works with your current
Hello, we're
sales,
speaking with
e-commerce,
Aneal
and accounting
Vallurupalli,
platforms.
CFO of
Take the worry
Airbase.
out of tax compliance
Aneal,
with
welcome.
Vallurupalli.
Thank you for having me.
Learn
Looking
more at
forward to joining.
Vallurupalli.com.
So,
That's
Aneal, we always begin by asking our guests to look back for us.
AVALLURA.com.
And what we're interested in is for you to identify some of those experiences that you feel really prepared you to be a CFO. There were lots of experiences, but there were a few that really probably drove it home. What would you share with us? What comes to mind?
Yeah, I mean, I think that looking back at the career journey, I think that for me, I came out of a Bay Area college and not the Stanfords or the Berkeleys. I actually went to Santa Clara University, and it was not a feeder school into investment banking. And one of the hardest things I found was during the recession, which is when I came out of college, was trying to even get into investment banking. Like, how can I? And that was like an underdog. I got to figure out how to get into this. And I ended up joining an investment bank that was a small boutique firm in San Francisco called Union Square Advisors. And we predominantly during my career there worked on enterprise software deals. And I think that, I say that investment banking is kind of like a hazing. And it was one in which I knew very quickly I didn't want to spend my time in it, but I needed that foundation. So I think one of the learning moments I had was one of the times when there was a large private equity firm that asked us, hey, given it was the recession and market was way down, they wanted to look at doing a lot of leveraged buyout deals. And so they said, you know what, we have this investment committee in 4 days. We'd like you to look at these 30 companies. over those 4 days, we literally did not go home. I slept under the desk for a total of 2 hours, and worked straight through 4 days to try and make this, investment committee meeting for this large private equity fund. And investment banking to me is kind of like, I always compare it to, I have physicians in my family as doctors in residency. It's kind of that foundation needed. So that was probably, I would say one of the most salient points that I remember from banking is that it put that foundation in place back then.
I wonder when you first got into it, whether you thought of banking as more a residency than perhaps a lifetime career, uh, and maybe it would grow on you.
No, I didn't know when entering it. I was just happy to get into it, um, and I'm still very close actually with the founding managing director there in that firm. But after about a year or two, I felt like it wasn't me, and which probably meant I wasn't even doing the best work that I could bring on a daily basis because I wasn't as passionate about it. And actually, one of my older brothers had already done investment banking at a firm that used to exist called Bear Stearns. And he was like, you know what? Look, you don't want to be a career banker. He's like, I have a lot of friends that are career bankers. And at some point, you just end up hopping from firm to firm. And it's a tough lifestyle. It's hard to be an advisor in client services. And so, for me, from there, I was like, you know what? I feel like I know very little about a lot of companies. And I want to actually know a lot about a specific company. And I really want to understand how companies operate. Because as an investment banker then, I didn't really know the details. You can build a financial model or whatnot about why you should purchase this company, but do you really know why CS does something at a company or support does something versus a rep, versus strategic finance versus this role or not? And that part to me was the most intriguing, is trying to understand how this wheel turns on a daily basis at a business.
Now you join next. You join Guidewire Software, and was it to help the company grow through acquisition, or what was your original mission there?
Yeah, actually, what most people don't know is I was actually an advisor for Guidewire Software prior to joining, and helped play a small part in their role in going public. And I joined that business a month or two after the company had gone public, and I joined to start the corp dev team. But and corp dev, for those who aren't as familiar with it, is basically a banker but internal at a company and making a lot less money at that. And so the benefit for me on the corp dev side was that the company got to steal knowledge from me, but I selfishly got to learn about all these other functions. And I was fortunate enough to work with Marcus Rue, the CEO, Priscilla Hung, the COO then, and they let me just take on a bunch of things. So I ended up over time handling strategic finance for the company, pricing, global sales operations, corporate development. And so it was a two-way relationship. The company got to take knowledge from me about corp dev and my experience by running deal processes, and I got to learn really about all these other roles and how to figure them out. So it was a great relationship.
Meanwhile, you're working closely with the finance function. You're working closely with the CFO. You're working closely with the finance team. You're getting an eyeful of how it operates, I suppose. At that place in time, was the CFO path in front of you, or not really? You could have gone other directions, perhaps?
Yeah, what I realized at the point in time, and so you got to imagine, I joined Guidewire when it was newly public. I think it was like $600 or $700 million market cap, and by the time I'd left, spent almost 5 years there. By the time I'd left, it was around a $6-7 billion market cap. When I joined, it was about 700 employees, and by the time I left, it was about 3,000. And naturally, what happens when a company scales like that is, these Swiss Army knives, like I was, start to become more dedicated functions where we need a pure corp dev person, we need a pure strategic finance person, we need a pure investor relations person, because actually one of my jobs is investor relations for a little bit then. And what I saw then was like, wait a minute, I want to take what I learned from Guidewire and I want to apply it to a smaller business. And I wasn't even thinking CFO or next title or anything. And I've never thought title based, to be honest, my entire career. I thought, where could I go next that could be interesting, that I can learn more and understand more and get a new experience, but also take my prior experience and allow the company to leverage that. And so hence the next opportunity I would look for would be a smaller business, one in which I could help potentially de-risk their next few years.
Do you feel like at that place in time you were known as an M&A expert, or how would you generalize for us?
Yeah, and so at that point in time, I was definitely in that time at Guidewire, we looked at about 100 companies and we bought 5, right? And so if you would have been at Salesforce, you probably would have done a lot more deals. So naturally, I was able to spend a lot more of my time in FP&A and strategic finance. My team owned the long-range model for the public company, right, Guidewire, and for each deal we purchased, we were actually like the deal sponsor. We were in charge of making sure we were hitting targets and tracking, are we hitting the targets that we assumed for each company, and post-merger integrations and all of that. And so over time, FP&A and strategic finance became my thing. And so by the time it was time to move from Guidewire to the next thing, that was what I was being leveraged for. And very quickly, I almost cut ties with corp dev, right, and got purely into the operations side of a company on the finance side.
I would love to have a better understanding. As you mentioned, the FP&A professionals, you work closely with them. You are one of them. I imagine you would characterize your skill set as similar.
Yep.
Wondering when a deal prospect comes together, do you consult with the CFO and say, hey, I could really use some more FP&A horsepower here for the next 3 months? Can we bring over Bob? How does it work exactly?
Yeah. So look, at a large public company, when I joined Guidewire, they did not, as an example, have a corp dev person. So I started the corp dev group.
Yeah.
But then when you go to a smaller business, right, a private company that's maybe between 20 and 100 million of ARR, you don't oftentimes have a dedicated corp dev person. And so you oftentimes will leverage a person internally who has that skill set historically, or who's worked in that industry. So for every company I've worked at, my role has always played the build versus buy versus partner analysis, right? What's the rationale for it? Because ultimately, I'm going to have to, as finance leader, sign up for why we need to spend the money to purchase this entity. Obviously, CEOs of private companies and founders oftentimes take the deal sponsor role, meaning they're going to the board saying, look, we could build this thing. It could take 12 to 18 months. But that's why we need to buy this thing, because they already have a customer base. They already have an adjacent product that fits nicely into us. They're on the same code or not. They have skill sets in AI or something that we don't have internally, and it would take years to hire all these great people together. These are all types of rationale for why you would purchase something. But my role fundamentally helps be a partner to the CEO in private companies when we go about that. Right? We go assess the company. Is this something we want to buy? Oh, wait a minute. What would the price be? Aneal, can you figure it out? Can you help us understand what would price be? And do we think we should build it, or should we buy it, or should we partner? Should we go find someone to partner with instead of going about the expensive way on building or buying?
Is there a risk of being siloed in corporate development, right? Because you're this specialized area. And, if you want to someday be a CFO, it's a nice place to spend a few years, but no, you better bring it back into a more traditional role, whether that's a vice president of finance, or perhaps your next role as head of strategic finance.
Yeah, no, that's very true. I would say that, what was it like for me when I went from investment banking feeling like I knew little about a lot of companies, and what was it like then going to corp dev, where I felt like I knew more about the company I worked for, but ultimately I did not own the operations side of it, right? So once you go from corp dev into a broader FP&A or strategic finance role, or broader finance Swiss Army role, do I need to adopt adaptive insights or a workday planning or an Anaplan? How should I think about, the roadmap in terms of when we want to bring on a PEO to help us hire in a certain country? Like, the day-to-day operations of how a company goes about financial decision-making does not sit in corp dev, right? That's where you go about strategic decision-making on what you can spend and where you want to be in the future as a product and as a business. However, the day-to-day decision-making doesn't happen in corp dev. And so for that, I felt that very much so.
Yeah.
At Guidewire, and I yearned for more of that. at a smaller company where I felt like I can help de-risk it and make some of those decisions and be the owner of those decisions from concept to execution.
When did it begin to occur to you that perhaps you wanted to be more a part of that world, of the overall decision making, influencing the decision making for the enterprise at large as a finance leader? When does that begin to grow in you? Yeah.
I think for me, it was after maybe 2 or 3 years of being, at Guidewire, and it took a while to figure out what I even wanted to do next, and it took the right time, and call it a fortuitous situation that would occur, but it's not a natural transition to figure out where you want to go to next. And for me, I've literally always guided myself based on, I want the company to be able to be de-risked by me, but I also want to learn and expand my toolkit around my belt. So for me, it took a couple of years to figure out where I wanted to go to next and what that role would be. I could have at Guidewire instead went somewhere at the same size and maybe got a director or VP role at a larger public company or the same size business if I really wanted to go hunt for that. But at the same time, I wouldn't be as close to a lot of that growth and some of those strategic decisions that can really impact the long term of the company. And so hence why, I didn't want to be at a public company. I definitely wanted to go to a private company. And I found that that realm of Series B, C range was one where, you got real revenue at a business. So there's not a humongous amount of risk. Obviously, there's always risk with a private company, as we've all seen in the last year. But it's one in which, there's already a customer base, there's product market fit, there's customer testimonials, there's a go-to-market that's already got some flywheel building, et cetera.
When you do step into a more traditional finance role, tell us about it. When do you get on a more traditional finance track?
So I can tell you how it happened for me, and hopefully that gives a little context. So, I was in that role at Guidewire for a few years. My wife's prior boss actually gave me a call. My wife had worked at a company, Success Factors. There was a gentleman by the name of Roy Yang who actually had a banking background. He was head of West Coast M&A for Goldman. Really smart guy. And he ended up eventually, after Success Factors, being the COO of Twilio, pre-IPO for 2-3 years and post-IPO for about a year. And so he, after Twilio, wanted to go smaller again and actually see that growth. And so he jumped on to a company called Mapbox that was an open API mapping alternative to Google Maps. And developers trusted it. So he actually gave me a call and was like, hey, I know you've been doing strategic finance, and I know you also have this M&A background. I know you've been touching all these random things like pricing and sales ops, blah, blah, blah. He's like, I would like you to come join Mapbox. I was like, what is a Mapbox? Like, what is that thing?
Yeah.
And so, he was like, look, we've got a couple accounting folks, but we don't have any real broad finance team at all. He's like, I want you to come and run finance and build this thing from scratch. And so that was what it was like, kind of making the decision. I was like, you know what? This is a good guy. He's smart. He's going to be invested in my success by taking a leap of faith on me, trying to build a function from scratch. And I'm going to learn a lot here, trying to figure this stuff out. And making problem solving my superpower, right? And so I took the leap, and then I joined the company. And my first day, he goes, "Hey, so I need you to have the company's operating financial model built by next week." And I was like, "Huh, okay, all right, let me figure that out." The company is scaling, tripling in revenue, like in a very short amount of time, and obviously doesn't know why. It's just got awesome product market fit at that stage. And so let me try and forecast that. Let me work with the team. They didn't even have a GL set up that was really one in which you could even understand R&D, sales and marketing, and G&A. So I had to go rebuild the entire P&L historically. And so that's what it was like for me, just a fire drill. And it felt like a fire drill for a couple of years every other week, but one in which I felt like with each passing week, I could conquer whatever came my direction.
Great insight there into how sometimes these roles are really boarding a moving train, I suppose. Tell us about the CFO path suddenly appears before you. Can you just give us a sense of when you knew? Maybe it was a recruiter, maybe it was a contact, but how did it happen exactly?
Yeah, so after Mapbox, I actually went to a company even smaller again, trying to take that learnings of how it was to run finance, and I worked really closely with really good leaders across people and legal throughout my career. I worked with a great people leader, Zaina Orbai, who after Mapbox went on to become the chief people officer for the Real, a public company in the clothing industry, and I worked with a great head of legal, and then I felt like, wait a minute, I think I kind of want to touch more than just finance. I think I could help, de-risk a company's execution if they're in a position where you can't, at an early stage, hire VPs for everything, right? You can't hire a CFO and a chief people officer and a general counsel when you're an 80-person company, 70-person company. Most companies can't do that. And so I went smaller again. And at that next company, I was able to take over G&A for the full business, and one in which it was a remote-only company before COVID. So I've been working remote first now for almost 5 years, 6 years actually. And so, one of the interesting pieces there was really trying to figure out how to de-risk the company for the total G&A standpoint, right? How do you run recruiting to basically hit targets like sales and recruiting capacity models to make sure we can hire to plan in a rapid growth business? And so, I think after that, it was doing the job already of CFO before the title of CFO ever occurred. And during my time at these companies, I had felt a real huge pain point in the solutions that I was able to adopt for the finance team. As example, I had an AP automation solution. I had an expense reimbursement solution. I had a corporate cards that we were using, like physical cards like American Express, and all these disparate things that I kludged together to try and help support the company. And that's when I met Tejo. And I joined Airbase about 2 years ago, but I met Tejo actually almost 5 years ago. And he was trying to sell me Airbase in my prior role. And so, I aligned behind the software first perspective of what I'm solving here, and we can talk about that later, and what the company is solving here, not myself specifically. But ultimately what that meant was I was very close to, and I was actually committed to becoming CFO at my last company. It had already been given to me. It was going to happen on a certain date that I was going to become CFO. And Tejo came and swooped in as CEO founder of Airbase to woo me away. So that's how that came about, which was doing the job and then meeting good people.
Excellent. Great overview for us. Thank you for that, Aneal. We want to ask you now, tell us about Airbase. What was it that you saw that day when you were swooped away? Tell us about this company.
Look, I think that as finance professionals, we, especially in the mid-market for companies, when we define it, call it company as small as 100, 150 employees and as large as 3, 4, 5,000 employees, we have been underserved. There's been a good solution, oftentimes as an ERP, call it in a NetSuite or an Intact that you can use for that mid-market segment. But there hasn't been a lot of tooling other than that. And so hence on the FP&A side came Adaptive Insights and other tools now like called Pigment that are helping with planning. But the controller and the accounting side of the house has been pretty underserved. And so I aligned on that concept with Tejo many years ago. And my experience has always been at software companies. And I've never worked for a company other than a software company. 80% of the deals I did in investment banking were software companies. And so obviously I'm biased to software and not to, call it lending solutions and call it the more fin side of fintech. And so Airbase was coming about it from a software perspective. We're going to charge you for software and you're going to get value out of it, through which you're going to save a bunch of money using the software. And so what does Airbase do? Airbase consolidates all of a company's non-payroll spend into a single software solution. Companies spend money in 4 ways. And that is payroll, how you pay your employees every other week. That's accounts payable, how you pay your vendors. Expense reimbursements, how you reimburse employees for dollars they spent on company behalf. And lastly, corporate cards. So your American Express, your wallet, the card you have in your wallet. So Airbase takes all of the non-payroll spend and consolidates it. The accounts payable automation software, the expense reimbursement software, the physical and virtual cards integration into a single software solution. And as of a couple of days ago, we announced a really cool product called Guided Procurement that helps every employee at the company log into Airbase and say, I want to spend company money. Just click this tab, submit what you're trying to spend money on, and Guided Procurement automatically brings in the legal team to review legal terms, the IT InfoSec team to review SOC 1, SOC 2 compliance or any other details there, the accounting team to look at payment terms, the finance FP&A team to approve budget for it. So really, another way of putting it is the accounting finance professional now spends about 80% of their time in an Airbase solution versus in an ERP solution like NetSuite. Although we are highly integrated with the leading mid-market ERP solutions.
Could you go back in time for us a little bit and just tell us about maybe an abbreviated history of its capital structure, this company's capital structure?
Yeah. So Airbase, we are high growth business. We raised a little over $110 million, for which we have the majority of that cash still left, as our founder is bringing prior CEO founder of a business that sold to SiriusXM. He believes in the number one goal of control your destiny. Hence why you go to airbase.com. That's one of our taglines, control your destiny now in this uncertain market environment. And number two, we're backed by first round capital, Bain Capital and Menlo Ventures. So, you're going to talk about blue chip funds who believe in this mission that we're on to make the finance professional's life better.
Were you was there a predecessor CFO, or were you the first CFO who stepped into the role?
First CFO. I'm first CFO of the company. I've been here coming up on 2 years now, very quickly. And another example of taking my experience of building finance teams from scratch, we've kind of built a team of really, really good people here at the company. So, I've built up the FP&A function with a strong director of strategic finance. We've added a controller who actually spent 4 years at Anaplan, 8 years at Anapan, 4 years pre-IPO and 4 years post, and a really strong data and analytics team, as well as a risk and underwriting team as well. They report to me. So, we've had to build out all these functions kind of, and add on by quarter.
What do you think, as you sort of architected your function, as you were just describing, should you do something differently? Something that maybe, traditionally you saw other finance functions and you're like, why would you hire that person first? Let's get this person in this role. Then we'll do that. I mean, did you prioritize differently, you think, than maybe just given your experience, you had some insight into something that you could see you could do differently?
Yeah. What always scares me and throws a flag is when I hear an executive say, I have a playbook. I think there are some playbooks you can use to help validate some assumptions about a business that you just joined. But there's always context for why a company is operating a certain way, without a certain role, without a certain team.
Yeah.
It could be budgetary, it could be intentional, right? Because that role exists somewhere else in the business, or the DRI, the directly responsible individual for that type of function, exists somewhere else in the company. So for me, I don't join a company and immediately open up 15, 20, 30, 40 roles. I seek to gain context to figure out, why is the company operating this way? Now, the low-hanging fruit was my strategic finance head, as I knew there was not an FP&A person at the business and we were going to need it. And if I was going to be a successful CFO, I was going to need to have someone really building those relationships with the directors and leaders across go-to-market and R&D to really forge those relationships to have a good FP&A function. As FP&A really is relationship-driven. And so that was the first hire. But from there, I started out by building a really strong accounting team. So, my background is banking, FP&A, blah, blah, blah. So what is my weakness? I'm not an accountant, right? So I need to solve for my weaknesses. I have superpowers, but I need to solve for my weaknesses. And so hiring a strong controller who also worked at another company that was solving finance people's needs in Anaplan was a great fit. And then it was, analytics is core to a company, aligning Tejo and the CEO to, do you believe in analytics? Because I've built this function at a couple companies in a row from scratch. Like right now, the company thinks Salesforce is the system of record, but Salesforce is a system of some records. There's also Marketo, there's Zendesk, there's NetSuite, there's your production warehouse for company data. We don't have a central data warehouse like a Snowflake. How do we bring in a team that can run that Snowflake and then also run homogenizing data and giving insights back to each team, right? That's also one way finance has changed over the last 10 years, is that function is oftentimes now being taken over by finance and bringing good professionals, as it's a services org within the company to help other members of the teams bring their best version of themselves each day to work. And lastly, something unique to Airbase is because we are a fintech company and we are moving billions of dollars of customer money across bill payment rails, card payments. We have to build a really strong underwriting and risk function at the company to make sure that we are being prudent with our customers' funds and doing everything we can to keep them secure.
Let's just touch on metrics with you. Even with someone who's sophisticated technology-wise, it's still the net promoter score that might first come top of mind when I ask for non-financial metrics, or would you tell me otherwise?
Yeah, I think NPS is a good leading indicator for how do we feel like the product is doing. I think there's a whole host of other ones, right?
Could you give us one, just one that might not be as common, or our audience isn't expecting you to say next? What might surprise us?
Yeah, so there's this concept of a value metric, and Facebook infamously or famously created a value metric where they knew that if you referred a friend within the first week, that more than likely you were going to become a power user. I think Slack had a metric where if you send X number of messages in the first week or 2 weeks, they knew you're going to be a power user. What I can say is that it's unique to each business, the value metrics that can lead or show that revenue will come. It's just not there yet. Oftentimes, these value metrics are really important in product-led growth, go-to-market motions, where the product is given out and quickly adopted and then grows over time internally within a company. But a value metric unique to each business. So in the payment space, it could be number of payments being sent on a daily basis per customer. It could be number of active users with your product. It could be product usage metrics in general, and looking at which product usage metric has the highest correlation to net retention rate. And doing the math and the analytics to figure out the R squared between the statistical relevancy between that metric and your net retention rate on a by customer basis.
Do you have, speaking of your visibility, do you feel your visibility is where it needs to be today? Are you constantly wondering why you can't see numbers sooner, quicker, real time, whatever it might be?
I feel like anybody who tells you their visibility is exactly where they want it to be is lying. I always feel like we're flying a plane through clouds, and I'm just trying to find a way to see a little further. Right now, is your visibility 10 feet, 20 feet, 30 feet, 40 feet? If you're a car driving in thick, heavy fog, that's what you're trying to do. That's what FP&A is trying to do. That's what the partnership with sales operations or revenue operations is trying to do. That's what we're trying to do with product management and figuring out what revenue is going to be driven from these additional product features potentially, and why do we have that conviction? No, I don't feel like I have all the visibility I want, and I don't think I ever felt that way. I was a part of Guidewire at our public company, and I think we hit 6 or 7 quarters in a row as a public company. I mean, actually, maybe 8 quarters in a row as a public company. And I didn't feel it then either. So I'd say that you're always striving for the next best step in getting visibility.
Want to just touch on talent with you. Wondering if it's a strange period. Silicon Valley's struggling somewhat, and it's a strange period in the technology corridor with the uncertain economy and what have you. Is talent challenging, though, at this place in time for you? Is it hiring still struggle?
Yeah, I mean, I think that it's not just unique to the last 2 years where hiring has been a struggle. I honestly believe if you are a startup in any phase, you've always felt like hiring the right people is one of the hardest things. And oftentimes it's not about the volume or the pipeline of candidates that you can have or get. It's about picking the right skill set coupled with the right mentality for the task at hand at the company. And that is not playbook based, right? That anyone who tells you I'm going to bring in my playbook for hiring and we're going to rinse and repeat that is not doing enough contextualizing of what is happening at this company right now. What stage of business is this? What stage of evolution is this function in at this business? And so hiring is always the hardest thing. And for me, it's when we get great talent, I try everything I damn well can do to hold them and make sure they feel like they're provided the opportunities to learn and become the best versions of themselves as I was provided by my mentors and folks who hired me.
One more question for you on the just related to hiring. Your next, and you talked about your FP&A hire, and not exclusive from that. What do you look for while you're trying to bring in FP&A talent? What is it? A potential future leader, someone who might grow into the role. What is it that you're looking for?
Yeah, I think that, and this is not unique to FP&A. For all of my direct reports, and I encourage this for my direct reports when they hire, the number one thing I try to hire for is this person self-aware? Self-aware at a company is extremely important. As a leader, I can tell you what are my superpowers and what are my weaknesses. And if I'm not self-aware to know myself, then I can't help de-risk the company, right? And so self-awareness is a very important trait. And number one, and number two, a team player, somebody who's about company first, not team first, and not individual first. Because we can hire an amazing FP&A person. They're just such an awesome modeler. They just can build the most insane, in-depth models and understand the entire funnel of the go-to-market and blah, 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 looking at historical data. But that model is not going to be very good if they don't forge great relationships with the teams to be able to get that good data and understand why we feel like the data we're looking at historically may not be the best indicator for what we need to look for in future performance. So, I think it's relationships. The ability to build relationships around the company is extremely important, especially when you're hiring a function for the first time at a company. Because I oftentimes, especially saying FP&A, and this is specific to FP&A that I've seen, is there's this concept of pull-push. When FP&A comes into a company for the first time, or that function does, we often find ourselves pushing ourselves into conversations. Now, over time, you hope and you strive to deliver so much value to each person that you work closely with that over time you find them pulling you into conversations. And so that's when I can tell that a function is starting to take hold and folks are starting to leverage it appropriately.
That's great. Thank you for that. We're up to what we refer to as our finance strategic moment question. And again, this might have happened anytime during the course of your career. We're just looking for a moment of insight that you experienced as a finance person because of your lines of sight into the business. Anything come to mind when we ask for a finance strategic moment?
Yeah, I think that, so one of my prior companies, I came in and it was very much, okay, we got to build, obviously. We need to start to build more, hire more. We need you to help prioritize that hiring. And we need you to bring that expertise from a prior company. And so, one of the first efforts you do is you try to figure out what's the state of this business? Like, how fast is revenue really growing? What's the pipeline look like right now? Are we going to be able to hit targets over the next 2, 3, 4 quarters? Because the worst thing a finance leader can do is overhire, right? Because we have to set the tone for the company about how to be prudent with our decision-making and hiring. And so, in gaining that context, I quickly saw, wait a minute, I know we don't need cash right now, but the metrics are all aligning really well. If I go and ask the investors for comps on what do the nearest Series B, Cs look like, what multiples have they been done at, what revenue growth rates have those companies had, do we fit the mold to where we can rinse and repeat a raise here? And so I came into the company with the CEO who was very kind of averse to wanting to raise, because he felt like running the company lean and taking unnecessary dilution was not the best thing. Now, looking at the metrics, I saw that we should go raise. Who knows what's coming? Mainly because this company was in that stage of going from, call it 20 to 100 million in ARR. That first 10 is where you find product market fit. That next 40 to get to 50 million of ARR, and then from 50 to 100 is oftentimes the hardest, where you can lose product market fit, or you go from being inbound only driven to also figuring out outbound sales motions. And there's a lot of risk. And there's a reason why oftentimes, investors say, "Where are you past 100 yet?" Because they kind of think you've got it figured out. At that company came in, saw the metrics and said, we need to go raise, and we need to go raise it in the next, call it 2-3 weeks. Because right now we have a quarter coming up. I'm seeing some pipe here. I don't know if I feel really good about the health of the pipe, and let's go. We'll quickly, align the board within a couple week period, and we closed a successful round for $50 million within 6 weeks from then. And I think that founder and CEO felt de-risked. Shortly thereafter, the company was able to make a little bit of a pivot in regards to the type of product it wanted, and it probably would not have had the confidence to make that pivot had it felt like it needed to prioritize short-term revenue to maintain runway.
From episode 888, this is 1 Minute with CFO Paolo Poma of Lamborghini.
In our business, the product development lasts from 18 months to 5 years, and the life cycle another 9 years. So it's quite a long period of time. So it's crucial to work in the proper time on product marginality to deliver the product, and we cannot fail on products. 10 years ago, the company was a 200 million company turnover. Last year, we broke the threshold of the 2 billions, scoring almost 2.4 billion euros turnover, which is an amazing times 10 growth in the top line, but even more in terms of profitability.
We're going to jump to what we refer to as the mentoring round, where I'll ask you several quick questions intended to inform and inspire. We want you to think back, I guess it was 2 years ago, as you said, you're closing in on 2 years there. The first 3 months, though, think about yourself in the first 3 months in a CFO role. If you could go back and just tell yourself something, there must have been something you wish you knew, or maybe you had done differently. What advice would you have given yourself? You can go back in time right now and tell that person.
Yeah, I think I probably don't spend too much time thinking about what's going well. And I generally spend more of my time thinking through what can go better. And I think, you have to take those moments and pause and say, we're doing some good things here. And things will work out. You're laying foundations here. It takes time for a plant to grow, for a flower to flourish. It's probably that. In those times, I spend a lot of time, and I say this for any finance leader, that's the leader of finance that, reporting to a CEO. In the early days, I try and focus a lot of my time trying to figure out, what does my CEO care about? Especially CEO founders.
Yeah.
They have their areas of things they really care about, and other areas where they're just like, just do it. I don't care. Handle it. I don't need to be brought into the loop. And so that is an area that I think that every finance leader has to spend a lot of time on, figuring out what your CEO actually cares about, really, because it can't be everything, right? It's got to be a list of 4, 5, 6 things that are really top of mind for them, that he or she is like, it's a non-negotiable. I need to be included. It's a sticking point for me if you change this in this area.
Excellent. We always like to have you reflect a little bit on the personal side for us, wondering if you have a habit or part of a daily routine that you're known for, something that other people point out, that's just Aneal, he's always did that. It might be what a family member might point out might share. Anything come to mind?
I think one of the things you'd probably hear from my teams is that I have a saying that I throw out there often, which is called ruthless prioritization. At this stage of a company, a lot of things look broken. Even when you're a public company, you'd be surprised. A lot of things can look broken.
Yeah.
And so it's all relative, but there's no way to actually tackle things in a way that you're actually making incremental progress unless we ruthlessly prioritize. And so every morning I figure out, what do I need to do today? What is the most critical thing that I have to do today, or things that I have to do today that if I waited to tomorrow, something breaks?
Right.
And so just ruthless prioritization.
I like it. Excellent. Thank you for that. Wondering if you have a book recommendation for us. Doesn't have to be a business book. Might be something you read to escape with. Don't know, but anything come to mind?
I say this often. So myself, I used to be a D1 tennis player back in the day for a little bit. And when I was really younger, I used to be top 20 in the US for tennis. Really? And I really found it enlightening to read Andre Agassi's biography. And so I find that an interesting book if anyone wants to peer into what it's like to play tennis on an individual level. I always tell people, like, tennis, when I'm growing up, is probably one of the lonelier sports as an individual sport, because up until very, very recently, which is now allowed in professional tennis, you're able to look at your box and they're able to give you some hand signals or whatever. But back when I was playing tennis a long time ago, at a higher level, you weren't allowed to have any communication. So think of another individual sport where you cannot have any communication with anybody while you're playing. So in golf, you have caddy, and boxing, you have your corner and whatnot. So an interesting read to understand what it's like to self-solve.
Yeah, nice choice for us. I think it's interesting. I'm not going to come up with the writer's name, but it's called Open. Is that right? The book?
You're right.
Called Open, yeah. And it's the ghostwriter is the same ghostwriter for Shoe Dog,
which is has frequently been recommended on this podcast. But I'd go out on a limb and I'd say that if you enjoyed Shoe Dog, you might enjoy Open and some really crisp prose. It's J.R. Moehringer. That's the ghostwriter. Well-written books. Okay, we are up to our final question.
Which is to have you look forward finally for us, Aneal. Just 12 months into the future, wondering what your CFO priorities are for that coming 12 months. What is it that you see as a priority? Ruthless prioritization, as you explained. What would those be?
Cash is king. And maintaining runway is the most important thing you can do as a finance leader right now. We're fortunate enough at Airbase to have a very long runway, and I want to keep it that way. And so anything we can do to make sure that comes to fruition and stays there is the most important thing we as finance leaders can do in this market. With the 25 basis point hike likely coming in interest rates here in the next few weeks, and likely with the position that they'll hold at higher interest rates for the coming future, call it 4, 6, 7 quarters, raising capital is not going to be easy for a while. So prioritizing cash is very important.
Aneal Vallurupalli, thank you for joining us on CFO Thought Leader.
Appreciate it. Thank you all for having me.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.